Good day, ladies and gentlemen. It's Eric Coffin. I'm here at the June 2022 Metal Investor Forum in Toronto. It is June 11th. I'm here with Patrick Downey. He's CEO of Orezone Gold. Orezone trades in Canada under ORE, trades in the US, I think it's QX, OREZF. Orezone is very close now to going into production. I've followed the company for years. It has a very large, very robust ore body in Burkina Faso. Anybody that's followed this sector and invested in it knows. I mean, I think we've all got a few bumps and bruises from single mine companies where things went a little bit sideways when they tried to go into production. And I got to be honest with you, Orezone's one company where I lose no sleep whatsoever. This management team has built 3 or 4 very successful mines. Everything seems to be just going pretty much perfectly at Orezone. Bomboré's, on time, on budget. They'll start running stuff through the leach here in a month or two. But I guess maybe give people the big picture metrics. So I think something we want to speak to is a lot of stuff really, and you don't really expect it this late in the day, really this close to production. But you're seeing a lot of really positive changes in the ore body. This grade control drilling and exploration drilling you've been doing has really been coming up roses.
Yeah, it's very, very positive for us, Eric. I'm really, really happy. I mean, we did see P17 South, that we had drilled a small reserve on it. We knew it was open. We had hit something as we were sort of following that down plunge that told us something else is here.
Right.
And we didn't have the funds at the time, obviously, because we're trying to build a mine. But as we raised the money and realized, you know what, we're going to be under budget here. We're going to have some spare cash. We went to the banks and they were very amenable for us to do it. And we started drilling again. And we really took a flyer up dip on that hole, and we hit, 34 meters of 4 grams, about
Nice.
15 meters below surface, right outside the pit.
Right.
Brand new pit. Now that's coming up. And so we're drilling that now, and we'll have more results coming out here in a day or two. And we're seeing things beyond that again. So this thing has grown phenomenally for us. Where the grade control drilling has really come up very positive, both at reconciliation in tons and grade, is we were modeling it originally as a number of shears. But then we started to realize that the folding that we see at P17 is occurring in the main ore body. And once we were able to get back at the grade control drilling, that has just absolutely come out perfectly for us. And we're putting out grid. I mean, I did a press release this week, and I think I did about 15 highlights in the page.
Right.
But if you actually look at the list of results at the back, every one of them could have been highlighted.
Right.
It was crazy results. And they finished in mineralization, many of those holes. So we're actually, understating what that pit really is.
Right.
So we are conservative in terms of how we do things. So we are but I think we're going to have a phenomenal mine here. It's going to continue to grow. Where will it be? My guess, having seen a few of these, somewhere in the region of 250,000 ounces a year for 15, 16 years, and still wide open. We're only down to an average depth of 160 meters.
That's a substantial mine. I mean,
It
you're
is,
getting you're getting towards the large end of a mining operation, and you're and it's probably going to turn to be conservative by the sounds of it, because it sounds like your grade's going to come in higher. But can you remind me what's your AISC on this?
Well, originally when we did the study in 2019, incorporating the diesel and whatever prices at that time, we were around about 600 all-in sustaining costs. Now we did that at an exchange rate of 550. It's now 620. So where we've lost a little bit in terms of the price of cyanide, the diesel, etc., we've gained something on the exchange rate. I would expect it to be around 650, 700. So you're going to have a margin here of $1,100 per ounce. I really expect to have a great year right out of the bat.
Okay.
Because we're hitting
Fantastic.
this grade from surface.
Okay, and so I know the timeline's really close now. We're like Q3, I guess?
No, look, I was there last week, and I'm expecting that I'll be going in 2 months' time for first gold.
Okay. Nice. Okay. Orezone Gold, simple story, but you have to look at the recent news releases. Like everything's just sort of better than expected, better than expected, better than expected. I got a feeling that's how it's going to go with production. They'll be pouring in a couple of months. This is going to be a high profit, high volume producer. And I know you said in the presentation in the Q&A, once Bomboré's up and running, you'll probably find some other stuff for your team to do because you want to keep this group together. So.
Yeah, I've been so happy with, I mean, one thing that, I've learned in my days of running or operating, find guys who've done it in the same area before. Don't pick somebody from northern Quebec who's never been to Africa to build a mine.
Right.
The guys that I've got, some of them I'd never met before, they have done a phenomenal job for me. I'm really, really happy with, and they're a great group of people to work with.
Right.
And, they're all looking forward to first gold as well. I mean,
Yeah.
It's getting quite exciting now, down at site.
Great story. It's a great story for a rising gold price environment, and it's kind of hitting, should be hitting the fun part of the Lassonde curve right now. Orezone Gold, ORE in Canada, ORZCF in the US. Go take a look. This is a great story. Thanks very much, Patty.
Thanks, Eric.
Okay.
Look forward to keeping you updated.